So man like Rishi and Boris recently did a madness with student loans, and I'd actually just like to unpack it and talk about it on this channel. It's been about 2 weeks now, but I thought I'd actually just let it marinate before I input my 2 cents that I actually don't have, since the government are just robbing everyone blind. Someone said, you know, this is a retaliation for ousting Rishi's wife for not paying taxes, or pressuring Boris to pay £50 for the series of boozy parties he hosted at Downing Street during lockdown. Like, seriously guys, £50. How's the man going to be able to afford catering for the next motive? Anyways, in this video, I'll be talking through an overview of the UK student loan system. So if you're American, you can actually just come back next week. Recent developments that have affected student loan paybacks and repayments. And lastly, if it's worth paying back your student loans quicker. Now, before I go any further, please stop what you're doing, hit the thumbs up button and switch it to 1.5 speed so you can get through it faster. Let me set the scene. Your beady-eyed kid named Charles conceived in a Queensland, you know, the bedrock of opportunities with a pinch of white privilege. Or in my case, the ghetto, where getting out of the hood is the ultimate dream. Anyways, you tolerate mandatory education for 18 years, barely scraping by, and society convinces you, or again, in my case, my African mum, that you have to double down with a 3-year course at some Midlands university so you can get a good job and make your family proud, aka allowing your mum to have the ultimate bragging rights in, you know, the family parties and so on and so forth. Now, back in my day, tuition fees were like 9k a year. However, Gen Zs these days are paying £9,250 for slideshows over Zoom, and international students are honestly just being finessed. Let's actually just be honest with ourselves. Now that you get the picture, let's talk about the practicalities. So there are 2 forms of finances required for the university in the UK. We have tuition fees and living expenses. Now, as I've mentioned, tuition fees for most UK universities are £9,250, and the UK government would usually give you a loan to cover this via a well-known body called Student Finance, which according to UK.gov website has funded approximately 500k worth of Courtiers Drip for unlimited trips to campus libraries and Midland tours since 2019. Drip is really killing my people, and these are actual facts, guys. Now, the living expenses is also covered by Student Finance in the form of a maintenance loan. However, that amount is usually based on your household income. So with a household income of about £31,400, which is the average in the UK, you'd be able to secure about £8,000, £818 worth of living expenses for a year. So for a 3-year course, your total payable loans would be about £54,000, which they actually send you a receipt for because Student Finance ain't playing no games and they really want all their money back in blood. When you start repaying your loan, and how much you repay depends on your repayment plan. Now in the UK, there are 4 plan tiers: Plan 1, Plan 2, Plan 4 and postgraduate loans. I'm not really sure what happened to Plan 3. I'm not sure if the UK government can count. I'm only going to be explaining Plan 2 because that's very much what's applicable to myself and most of the Gen Z gang out there. However, you can always check the gov.uk website for information on the rest of the plan. Now, currently, as of this year, a Plan 2 repayment schedule would mean that you have to start paying back your loans once you're earning £27,295. So essentially, whatever you earn above that, you have to pay student loans on the difference of that, basically, which is usually at 9%. So a quick example to conceptualize this is that if you were earning 31k, which was like the average salary in 2021, essentially like the difference you would have to pay back is on £333. So you'd have to pay 9% of £333 every month back to Student Finance because they're the ones that loaned you the money, and that equates to roughly about £30 a month. And in the grand scheme of things, like £30 a month is not that bad, but when you start to earn, like, you know, the big bucks and you're moving to like the middle earner, like 50k, 60k to 100k, you know, the money really starts to add up, and most importantly, the accrued interest on the loan that you take out really starts to add up as well. But I'll illustrate that in the latter parts of the video where I talk about if Student Finance paying it back quicker is worth it or not. Now, the recent developments on student loan repayments essentially trumps all the figures and explanations I've just gone through for students enrolling in 2023 to 2024 academic year and onwards. So let's break down these key changes. First of all, we have repayment terms. The repayment term for student loans will be extended from 30 years after graduation to 40 years, meaning that many students will still be making repayments into their 60s. So previously, your student loans were wiped off after 30 years, but not anymore. The income threshold at which repayments will begin will also be lowered from 27,000 to 25,000, meaning that even as a low income earner, you still will be paying back that money ASAP Rocky. Like, there is no holding back on that. Now, what's a bit cheeky for graduates of student loans after 2012 who earn significantly higher are 2 main things: the thresholds and the interest rates. So the initial plan was that thresholds at which you had to pay back your loans would rise with inflation. So essentially, you would only have to pay when you are earning more. But now inflation has gone up and the government are like, actually, For you guys who've learned since 2012, we're just gonna freeze that at 27K indefinitely. So if you think about it, the new grads, they've set at 25K to ensure that they get caught and start paying back the loans expeditiously. And then for the old grads, they've frozen it at 27K to make sure that they also get caught and start paying back. So either way, like, everyone is getting caught and we're all paying back this student loan, like, whether we like it or not. Now, on the interest rate side of things, this is what you pretty much call like daylight robbery. So the interest rate on the loan for those currently at university in the UK is calculated by adding 3% to the retail price index, which is a measure of inflation. And when you add that all together, it takes you to a humble interest rate of about 4.5%, which is not bad. But now the latest RPI figures is at 9%, and then you slap a 3% on top of that, and that takes the overall interest to a whopping 12%. So for a very high earning recent graduate on more than 49K a year, according to the IFS, it means that they would accrue about £3,000 on interest charges on a balance of about 50K debt over 6 months, which is just wild. Now, this latest increase will be a short and sharp spike because there's a limit set out in the law covering student loans in England, which will actually take effect in March 2023, 6 months after the increase. And the law basically says that the interest charge on student loans cannot be higher than unsecured commercial loans that can be taken out on the high street. So essentially, like normal loans that you should be able to take out of the bank, they're basically saying that student loan like interest rates can't be higher than that. But apparently the whole idea of this whole recent changes is for high earning graduates to kind of be deterred from like being able to pay back the debt as soon as possible and basically staying in debt longer. And overall, these development just means that graduates will be paying for longer and be paying more, which is just wild. But it's a mix of inflation, poor policy decisions and implementations, and just the overall economy at the moment. Now, the question we've all been dying to answer, is it worth paying back your student loans early? So to determine this, let's just look at 3 examples. So firstly, if you're earning the average salary of about 31K, then there's really no point paying it off any quicker because you're only paying a mere £30 a month and you most likely won't pay off the loan before it gets wiped off. So that's that. Now, on a 50K salary, the IFS actually estimate that you will pay back more than you borrowed if you pay your student loan repayments on schedule, i.e. just the monthly payments plus the overall accrued interest on the loan. And again, for illustration purposes, a 50K salary would see you paying monthly payments of about £170 per month. Now, the 50K salary bracket is very much like middle earner status, and I would say it's important to assess any financial obligations you have before considering if it's worth paying off the loan quicker rather than on schedule. And that needs to be very much an important consideration. Now, on the 100K plus salary, you're very much going to be paying a good chunk on a monthly basis, but then also the accrued interest, according to the IFS, is likely to lead to an overpayment if you repay on the payment schedule. So at this point, it's imperative that you consider repaying early if you have disposable income to do so. Now, again, this is not financial advice, guys. I'm so sorry. I actually didn't put that disclaimer at the start. I'm not imploring anyone to go and start paying their student finance back as soon as possible kind of thing. It's very much on a case-by-case basis. Assess your financial situation, and if the numbers make sense, do that. I know me, I'm not doing that because I need every single amount of money I can get at the moment because I need my money for certain projects and things that I'm trying to do in the future. Anyways, with that being said, if you guys like this video, please like, comment, share, and subscribe. Turn on post notifications so you don't miss a thing. I'll catch you guys in the next video. Deuces.